potentially what one could call a bit of tourism in private markets for a search for yield is not necessarily the best for all parties.
Welcome to Frankfurt am Main. We are here today at an exclusive Fund-Pure roundtable regarding the topics private markets, talking with CIOs. With me, Emmanuel Deblanc from M&G. Hello, welcome here in Frankfurt.
Thank you for having me.
Yeah, private markets, we had it in the discussion, getting more and more attention in the industry. What kind of role do private markets play for M&G?
Well, it's a crucial role. First, if you look at our portfolio of assets under management, it's a significant share of the pie, about 25%. But it's also clearly formulated as one of the axes of development for us. So within asset management, private markets is where we see value for our investors, but also for the shareholders of M&G.
As we heard in the discussion, it's not like the private markets. It's very kind of a lot of different sub-asset classes. What kind of asset classes are most important for you?
So we've got quite a diversified book of business, and I just won't enumerate all of them because it's going to get lengthy. But just to give you a flavor of things, we invest in impact, and that is in emerging market and in developed markets. We invest in infrastructure on the credit and the equity side. We invest in credit, broadly speaking, private and structured. So you see, we've got lots to offer around the range of products in private markets.
And rates are back since a couple of months, couple of years now again. Would you say anyways regarding the new rate situation, it's a golden future for private markets?
It's golden to some extent, yes. Or it makes it, I think, a healthier background or backdrop for investors. I think the hunt for yield that we have seen and potentially what one could call a bit of tourism in private markets for a search for yield is not necessarily the best for all parties. And I think we're in this adjustment period where people are getting used to positive real rates. I think the biggest change is that change in the real rates. Nominal yields, obviously, are influenced highly by inflation. And even if inflation goes down and nominal rates go down in absolute terms, I think we're likely to see, or at least that's what the curves on screen tell us, that the real rates are going to remain in positive territory around the 2% level, depending on jurisdictions. But what does that mean? That means that money has value nowadays, and I think that's better for all of us. And that also means that we're going to ask for private markets strategies to deliver more returns relative to passive or liquid investments. And so it's all going to be about the value contribution and what one calls the complexity premium, which private markets can deliver. And that's the conversation we're going to have, which is what is the relative contribution of that complexity premium versus the total return.
So rising interest in private markets for the whole industry, but also for M&G, says Emmanuel Deblanc. Thank you very much for your insights.
Thank you.